From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 24th, 2017. Today we're going to be taking a look at the GBPUSD Greater British Pound versus the US dollar for today's trade analysis. First off, starting here on the daily time frame, the long-term trend going all the way back to March of this year has been up. We can see the black trend line, and the trend has been up for quite a long time. Even in the midterm, we can see the trend was up. The red trend line shows a bullish section of that longer term uptrend, capping out the highs into the mid 1.3200s. Now, over the past several weeks, though, we have seen a change of this trend where the market has pushed down along the blue trend line. And even over the past few days, we've pierced and broken through the black trend line. So some different things setting up here for the pound dollar as far as the trends go. Where we have seen overall uptrends, we've seen a recent downtrend here for the pound dollar. Now, not only did a few days ago it break through the long-term black trend line, we also note the 100 period simple moving average here on the daily time frame, the green line here waving into the chart here. It broke through that at about the same time it broke through the trend line, the black trend line here. Taking note back in history, the blue circle, we see support at the moving average. The red circle, bottom left, we see support at the moving average, and those began the next phases of the rise. Well, we could see that over the past few days, it did not make that rise from the moving average, and now has pierced and broken through it. So some different changes for the trend. Let's zoom it in a little bit here on the daily time frame. I took Fibonacci from the low of the red trend line down here at the blue circle to the highest high. Not only that, we see the market breaking through the 618 fib of that previous red trend, 1.2848. We're underneath that. That's the bottom, by the way, of the yellow shaded area in the middle of the chart. So at the same time, we broke through the 100 period moving average, the black trend line, and the 0.618 Fibonacci retracement level of the previous trend. So all of this telling us that we're seeing a change of the trend pattern. Where it was an uptrend, we are now breaking through some of those indicators and looking more bearish than bullish right now for the pound dollar. We can see and recognize really a trend pattern within this downtrend, the blue trend line that's happening right now, and I've put these boxes here to really give us an insight into that trend pattern, where we saw the initial fall off, the blue box and some congestion, a breakout and a new fall off, the black box and some congestion, and a breakout. Now we're looking for the next iteration of the pattern, some sort of congestion or a rally to resistance, just like it did at the black box and the blue box, to give us an opportunity to trade the current direction of the trend, which happens to be this blue trend line that we've been discussing here. So that's what we're looking for today, a rally into that area. Not only would it rally under the 100 period moving average, the black trend line, and the 0.618, it would also rally underneath the blue trend line here. So that would give us some opportunity to go short in the direction of the trend pattern, and in the next iteration of the pattern, the congestion breakout, we're looking for that congestion again. The orange zone right now, obviously holding as support. Zooming in one more time here. We can see the orange shaded area at the very bottom of the chart holding as support. So we will obviously need to break through that orange zone if we're going to see it go lower. We've already discussed the possibility of looking for a short or a sell opportunity into the 618 fib of the previous trend and into the yellow shaded area. Remember, we do have that 100 period moving average sitting a little bit higher, all the way up here towards the 1.2883 level. So I think if we're going to get into it, we have to assume that there's a possibility that the market may retest that. So we need to use appropriate risk strategies and stop losses if we decide to dive into this short opportunity. The risk here is pretty simple. The risk is it breaks back above the yellow zone, and we don't want it to do that. If we decide to go short, we want it to stay under the yellow zone and continue the bearish pattern that we've seen here for the pound dollar, breaking through the orange zone, targeting the next level of support, which happens to be the green zone at the bottom of the chart, 1.2730, or even into the 127s or 26s for the pound dollar. And all again, the risk is it breaks back above 1.2870, top of the yellow zone, and starts to work its way back higher. One last thing before we move on, I want to take Fibonacci from the highest high on the chart down to the most recent low, which happens to be right here at our current intraday low. That puts the 236 a little bit higher, 1.2890. So I think it might be prudent to make sure stop losses are above that, above the 28.90 level if we decide to dive into this at the yellow shaded area. Pushing into 128.45, 128.70, that's the entire yellow shaded area. Pushing deeper into that will improve our risk versus reward. Again, our risk should be somewhere above that 618 fib, or sorry, 382. Sorry, 236 fib at 128.90. 618 was at the bottom of the yellow zone. We need it to be above there, above the 236 of the current down range, to make sure we're able to stay in this for the next leg of the downtrend for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.